To the Wendell Effect for the Indian markets. My name is Brandon Wendell, and I'll be guiding you through my view of the Indian markets, as I said, for the 12th of, or the week of the 12th of June, 2026. So we'll go ahead and jump right into it. Before we do, I just need to remind you, we are not broker-dealers or investment advisors. We're going to look at this information from an educational standpoint only. I'm not telling you to buy, sell, or hold a particular securities or give any personalized recommendations. All markets do involve risk of loss. Please do not trade with money you cannot afford to lose. And we are also not subject to trading restrictions, so we can have a position in a security or initiate one at any time. Please stay in touch with me. You can always email me if you got any questions or any suggestions, anything you'd like to talk about. You can hit me up at brandonwendell.cmt@gmail.com. You can also find me on Twitter regularly at TraderBdub. And please, if you could, hit the like and subscribe button. That way, it can help us out, as well as if you hit the alerts, you'll get notified we have new videos coming out on a regular basis. So last month, the Nifty was pretty bullish. Kotak Bank is right behind my face here. You can see that was somewhat bearish, but for the most part, we have a lot of green on the screen, except for a few notable names. And last week, we kind of gave up half of that. You can see that half the screen is green, half is red. Actually, a little more red, it looks like. So we're getting into kind of a slow period for the markets. Not necessarily selling off, but not rallying as strong as it has been. Actually, when you take a look at the seasonal move for the 12th of June to the 17th, which is Friday, we have 60% of the time over the last 10 years we've dropped. And actually, the last 5 years have been negative. Not much, just an average return of a little more than 0.25% to the downside. So we're simply pulling back this week. Afterwards, though, when you take a look historically, 90% of the time from the 17th of June until the mid-July, actually end of July 23rd, for the next month, 90% of the time, the markets have gone up, or the Nifty has at least. So looking at the Nifty weekly chart, you can see we've lost momentum. We came up to the prior highs. We're getting a little selling pressure. We lost momentum compared to what we had before. That's telling us we should go at least with a pause, if not a small pullback. I don't see us pulling back very far. On the daily chart, that negative divergence is also suggesting a pullback. I mean, we did hit a projection target. So if we pull back, it may just be to this 18,338 before we start to rally yet again. So keep an eye out for that demand. It's also the 23.6% retracement at around 350, 18,350. On the 4-hour chart, keep an eye out. What's happening here is we may be changing into a bearish trend. Typically, if you get a divergence like this where prices go up but the indicator goes down, if after that occurs, you get a peak in price. Now, in order to have a peak, you have to have a high surrounded by lower high and lower lows. So we need to break that purple line there at 18,559. If that happens and we have not gone above 60 on the RSI, then we're likely to go into a downtrend, at least temporarily. Like I said, the downside target is 18,180. That's my 4-hour time frame. We got a little drop-based rally right in that area. It might be a little higher, 18.2. But that's where I'm looking for a bounce to continue to start to rally towards the midpoint of the year. Oops. A little bit closer here, we're going, or a little bit further along here, we're looking at Reliance. You can see we had a negative divergence, pulled back, and we just did peak above 60. So this is not a bearish reversal. It's just a pause. Again, we might retreat a little more this week down towards that 2380 area, but it's just a small pullback before we get another round of push to the upside. Looking at TCS, there might be a head and shoulders forming here. We got the left shoulder, which you can see right here. We have the head here, which took us up to a projection target, and we may end up forming the right shoulder, so we'll have to wait and see. If it does, if we fail right around this 3,300, that would be the right shoulder measurement most likely, and we break down through the neckline. You would measure the height of the head and extend it down from the break area. As of right now, we're getting ready to bounce and form that right shoulder, so this week I see TCS being a bit bullish. On Infosys, good news if you're long on the tech sector here, or technology. You can see that we've got a low that was just put in where we were not below 40. So that's suggesting we're going to resume our move up. And it looks as though we could project up to about 1380 area, maybe even 1410. So Infosys is going to try to work its way up. It might be a little slow at the start, but we are seeing bullish price action happening now on this. HDFC Bank is coming to a crossroads. We're in kind of a wedge formation, and typically these wedges break the opposite they're pointing, so that should break to the upside. But something's got to give. Either we're going to break down or we're going to break up. We are losing momentum right now, so we could easily break to the downside. ICICI Bank is retreating right now, but it's just, again, a small retreat, not necessarily reversal of the trend. There is some troubling signs here where we did make a little peak in price below 60. So actually, we might retreat a little bit more towards 919.40 before we get our footing and start to go back up. So keep an eye out for that. As far as the banks go, the bank Nifty is actually somewhat bullish this time of year. From the 12th of June to July 23rd, 70% of the time, we rally before it starts to stall out, and we get about a 3% rally on average. The last couple of years, last 3 years, we had 2 years that were very bullish and one that was just slightly bullish. So we'll see if we're going to get one or the other, either a big move up or a small move up. Right now, we have a divergence on the weekly chart. You can see prices made new highs, but the indicator didn't. That's suggesting a small pullback before we start to rally, which if, again, you look at the seasonal move, you see there's typically a small pullback before we rally that's averaging out the last 10 years price action. So it wouldn't be surprising to see us retreat and then rally. Looking at the daily chart, that's exactly what I'm noticing. It's not very weak right now. It's still strong, but we had movement up while we lost momentum, and that usually leads to a pullback. So our first target on the pullback would be 43,265 before we could bounce. So expect the bank Nifty, or Nifty Bank, to be a little bit weak this week before rallying. On the 4-hour chart, we're definitely seeing weakness here. We did have a negative divergence where prices made the highs, the indicator didn't, and we did, in fact, put in a high that had a peak below 60 on the RSI. So this is suggesting that we could go down and maybe even deeper. Before I was saying about 43,265. Here, the next demand zone on the 4 hours isn't until 42,000. So keep an eye out for that. It could get pretty bearish. Let's follow up on some of the trade ideas that I had put out before. On HDFC, we actually bottomed out right at our demand zone, but we were too low. We're below 40 on the RSI when we first came in. We've come in and gone deeper, creating a positive divergence where prices went and made a lower low, but the indicator made the same low. That should lead to a bounce. And we're still kind of in the area, so if it doesn't leave soon, within the next day or so, you'd want to book your profits because it's not likely to work out. The longer you stay at that demand zone, the higher likely you are to break through. So we need to take off early Monday or Tuesday. If not, you got to take your small profit or break even and get out. Maruti Suzuki, unfortunately, just took off without us. It was a very bullish stock. I was looking to buy. It just never came back to my entry point. So that one's gone, unfortunately. Nestle India, unfortunately, same thing. I was expecting it to rally, and it did. It just never pulled back deeply enough to let us in, so we have to move on from that as well. REC Ltd, same thing. I was expecting it to be a very bullish stock. Unfortunately, it came very close to my entry point, not quite there, and it's already hit target 1 and target 2. So I definitely picked the right direction. I just couldn't execute the entry. Well, moving on to the next one, we have NCC Ltd, and this was not supposed to be entered. You can see as we came into the zone, we had too much selling pressure. I do not buy if the RSI is below 40. So it ended up breaking through. If you did buy, you got stopped out, or it did bounce, but still hasn't made the target yet. So we're done with that one at this point. If you haven't entered, don't try to chase this. NHPC did work. You can see it came into our demand zone, and we were way above 40 on the RSI. So it's bouncing right now, very slow, and we needed to get up above 60 on the RSI early this week. If by the close on Tuesday we are not getting a candle close that causes the RSI to stay above 60, we're just at it right now. We really need to be above it. So if we don't get above it by a few ticks or a few points even, you may just need to book your profits, and it's likely just to stall out. So keep an eye out for that. Electcast on the daily chart, unfortunately, that one didn't work out. It did pull back, just not enough for us to get in, so we got to move on. So we were right. It was bullish. It just didn't make it for an entry. And Bharat Electronics, same thing, very bullish, just didn't let us in. We move on. So we have a couple of new trade ideas we can go over for this upcoming week. One is NBCC LTD, waiting for a pullback. Not the best demand zone, but there is a lot of buying pressure that comes out of the 39.90 to 40.70 area. So if we get a pullback into that area, look for it to bounce. It's an 889 opportunity, so we should hopefully meet up with the demand zone and the moving average at the same time for extra power. Do not buy if the RSI goes below 40. Rama Steel, same thing, very bullish, 889, and you can see that's actually inside the demand zone now, so hopefully we meet up with both for a powerful bounce up to our targets, 43 and then 48 basically. But if, as we come into our demand, if we happen to be below 40, I cannot buy unless there's a positive divergence, so keep that in mind. Anyway, that's what I got for you for this week. If you have any questions, please email me, brandonwendell.cmt@gmail.com. You can also find me on Twitter @TraderBDub. And if you could, please hit the like and subscribe. It helps us out a lot. You can find us always on the Wendell Effect on YouTube. Until next time, trade safe, trade well. Take care, everyone. Aljo.